Today in the Trend Report, we're going to dive into the impact on new first-time home buyers, on existing home buyers, what's going on with the mortgages, what's going on with interest rates, what's going on with home prices, and all of the cost crunch taking place on the home front.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Today on the Trending Report, we're going to be talking about the cost crunch on the home front, most specifically as it affects real estate, but we will look at the household in general as well to set kind of a baseline. And then in addition, as always, we're going to look at stock market data, and that data ends as of last Friday, December 8th, and we'll talk about how things are looking for the year end 2023 as it relates to the markets. With that being said, let's jump right in. Now, I will put a quick caveat on here. You may notice that this one particular slide, I'm actually reusing from my previous discussion. Now, I don't normally do that, but today I wanted to bring it back in front of you simply to kind of set the stage, set the foundation, if you will, for the discussion on inflation, because I'm really going to concentrate on the impacts on real estate today. But we did talk about inflation and what's going on with the pressures of the household, basically at the grocery store, putting gas in your car, things of that sort. And it is important to understand that unless the inflation rate is negative, prices are always going up. It's just a matter of how high or to what degree are they increasing. So here in 2022, when we were looking at inflation coming in at about 9%, that meant that it was 9% greater than the previous year. But even now that inflation is coming back down and we're looking more in the 3% range, in that instance, it's still going up. It's just going up at a slower pace. It's not going up at the 9% pace. It's going up at a 3% pace. So the increases that have already taken place are still there. And now we're building upon that mountain, so to speak. And so that's why you'll see this Bloomberg article from the end of November talking about the price increases overall from January 2020 to October of 2023. Those price increases are overall during that period. So used cars went up by 35%. Groceries here went up by 25%. Rent over here on the far left went up by 20%. Natural gas is up 29%. Electricity is up 25%, and so on. So it doesn't mean it went up 25% in a year. It means it went up 25% since January of 2020. And that's the culmination of the increases in inflation over that period of time. Now, when we take a look at the next slide, we're going to get into the true aspects of real estate and real estate purchase, which is the point I truly wanted to make here. But this is a great foundational start. And like I said, if you want to dig deeper on this particular topic, check out my discussion that took place in the previous Trending Report. Now, here is an update from the Wall Street Journal, and they're talking about the fact that the math for purchasing a home may no longer work. Now, I will say that don't get overly caught up in the minutia of today, meaning that in the long run, it is a difficult argument, in my opinion, to make that it is wiser to rent than it is to own. I do believe you will be farther ahead owning your real estate rather than renting your real estate or renting your home or your apartment or whatever the case might be. So it is important to keep that in perspective, that although we are in this scenario today, it does not mean that in the long term, this is the way to think about these things. But it does prove to be a big burden for many individuals today. So here's the cost of renting versus owning. Most specifically, you'll notice that we saw a little bit of dip in the gray line here, and then it's pretty steady. A little dip there again, and then coming up here. That's the average monthly new lease payment. The average monthly new home payment, however, took this market jump up from here to here. So it went from literally on the median $2,000 a month cost to over $3,000 a month cost in basically a year's time, maybe 18 months time, based on the chart here below. So this would be 2021, 2022, 2023. So in that instance, we saw a huge jump up. Now, why did we see that happen? Well, it was a culmination of two primary factors, which if you peel back that onion, you can talk for days about all the other impacting factors there. But the main things were a jump in interest rates, so the increased interest rate on mortgages, and the fact that the values of homes skyrocketed during the pandemic, which is what we're seeing on these two graphs up here. So the average fixed mortgage rate for 30 years has been coming down literally since the early to mid 1980s. And then it hit rock bottom in the 2020s, but now it's taken this healthy size jump up, which seems like a mammoth size jump until you compare it to the long historical past. But nonetheless, look at the steepness of that increase and how quickly that ramped up. And that's really the same increase we're seeing over here on the left is because of that big jump. But it gets magnified when you look at the home prices. So again, here's 2020. If the median home price here in 2020 versus today in 2023, again, a very big straight jump up. Whereas it had been a pretty steady growth line. We took a spike up and then down here, but relatively steady during those periods of time until the mammoth jump that took place. Excuse me. Now, the result in that is that the average home buyer, the age has gone up because they need more money and they tend to need to save more, or their parents maybe are stepping in and helping them. So first-time buyers, which here in around 2010 was coming in at about the age of 30, maybe even 29, depending on where that line is, to about right about 35 for first-time home buyers. So about a 5-year increase. And then all buyers, as you can see, the home or the angle is going up. And then repeat buyers, which simply means that you're in your second, third, fourth house, continues to go up. So the median age of home buyers is definitely going up, which is putting pressure on the younger folks. That's pushing them back into rental. And then rents are going up dramatically as well. But you don't need to come up with as much money down. You don't need the financing. Now, having some young adult children, I have seen firsthand the scenarios going on with not only the rent, but also in them trying to purchase a home. Because in many instances now, because of the way this jump took place right here, this huge jump in sales, in sales prices, many times the homes were being sold without financing. They're being sold without full inspections and so on and so forth. Other concessions are being given to the sellers because the buyers are so desperate to get in. So many times family money is coming in, helping to purchase the home without financing, and then they're financing it after the fact. So it's a very unique kind of scenario that's been going on in real estate. Now, all of these things as we're ramping up towards the end of the year, especially as it relates to the interest rates, obviously that impacts the stock market. So let's take a look at what's going on there. So here we are looking at U.S. capitalization. This is small caps to large caps across the board. Here in the blue bar is the Vanguard total stock market. So we're coming in, you'll notice, with basically large caps up here lifting the market overall. Dow Jones Industrial, S&P 500 Value, and S&P 500 Regular Index. The overall market is really being buoyed up by that. Down here at the bottom, we've got mid-cap growth. We've got 500 growth. We've got the small cap index and the small cap growth. So basically, you're starting to see value move towards the top of the heap and growth move towards the lower end of the heap. Now, that being said, everything's green. Long-term trends are showing green, swing trends are showing green, and being in the zone is showing green. And so we're seeing unity across the entire spectrum of capitalization. And this right here on the chart, this is the 200-day moving average. So you can see we've got a nice lift up here that's been taking place. Again, down here, both the swing and the trend are in the bullish category. And as we can see, these green dots, the zone is in the bullish category as well. Now, if we look at sector, we get a little different viewpoint here. Overall, it's generally the same, but you're starting to see the subsets of the market that are starting to struggle a little bit. So a moment ago, you'll notice, I'll flip back, that all of the large cap versus small cap, everything's showing up as bullish, all these green dots here. Now here we're seeing some red and some red dots. And that's because although it doesn't matter if it's small cap or large cap, it does seem to matter what sector you're in. So the sectors that are really lifting the market are infotech, financials. We've got gold in here, consumer discretionary, industrials, and so on. Down at the bottom, consumer staples and energy and silver and healthcare are dragging things down. But nonetheless, if we equally weight all of the sectors, which is what we're doing here with the blue bar, you'll notice that we see a similar jump up here that we did on the overall stock market. We're seeing green on the zone. We're seeing green down here on the swing. We're seeing green on the trend. So everything is looking positive in the overall sense of the word, not necessarily for some of these sectors down here at the bottom, but overall things are looking still pretty strong. On international equity, here we're seeing the total international stock market is again still showing mostly green. We see a lot of green up here. The S&P 500 we keep in here as a placeholder just so you can kind of peg the U.S. against the rest of the international. So it is showing that the U.S. is essentially leading the pack still. But we've got Europe coming in right behind us, and down here at the bottom we've got China. So again, the overall international stock market, we're still seeing greens for the most part. You'll see right here, we do have the zone has just turned bearish, but the swing is still showing bullish, as is the trend. And then finally, on the overall U.S. bond market, with the overall bonds, we are seeing that what's dragging them down continues to be treasuries. What's lifting it up is municipals. There is an international up here, and investment grade corporates. Long-term and investment grade corporates are up here. But the bonds overall have been moving in the same direction as the stock market, which you don't always see. But today we are seeing that with the swing, with the trend, and also with the zone. So overall, the market is a bit choppy. Obviously, there's a lot of volatility going on, but the strength so far seems to be holding as we come in to year end.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.